All right, I was gonna pretty much stop because the project is over and it went really well. It ended up project to the Golden Gecko's taste making dough with Tasty Trade 2014. It made 10.84% and really, according to my Thinkorswim, only had 30 trades, filled in and out. So I was asked to continue it because a lot of people enjoyed the forum. It's real simple. It's just a really low key place for you to have your questions answered and learn how to do basic trade and get a little edge there in the market based on what I've learned and what Tasty Trade has so graciously put out there for us to take advantage of. So I wanted to continue and basically do a quick overview on what the concept is. So those who are new here and those who are our old members, have a place where we can kind of reset for the new year and keep things kind of fresh and up to date, so you don't have to look all over um, everywhere for what you need. Okay, so here's a nut. I'm not going to read all this. You can go ahead and read it. I'm going to place my video here down below. Okay, so I just kind of want to do a real quick overview. This is meant for people who are new, mom and pop traders who don't have time to trade full time. You can definitely do it. Okay, and so this is the setup right here, and I'll go into real quick on why it works or the basic concept so you kind of know what happens. So here's the basic gist of it. And this funny thing is we've all been taught it to buy low and sell high. That's all a golden gecko is. Okay. The only difference is we're gonna sell first and buy back later. All right. So look at it like this way. Let's say you sold toilet paper and you could get a bunch of it, at Costco, right? Or from Amazon. Instead of stocking the toilet paper, you're gonna sell up the toilet paper first to a buyer who wants it for $10 or whatever, and then you're gonna buy it back later for $1. Okay, that's basically all it is. You're just gonna sell the product first. All right. So let me show you what that means a little bit. All right, as you can see here, this is the a chart on Thinkorswim. Now I'm going to show you Thinkorswim and Dole, which is all supported through Tasty Trading and get all kinds of help with. Um, if you need help with getting your charts, whatever, let me know. I'll email you guys links to the exact chart so you can get the exact same thing on your screen. Don't worry about building it. I'll just send you the link and then hit save afterwards. All right. The name of the game is we're selling stuff, all right? And all we're doing is the symbol we're selling is SPY, which is a Standard & Poor's 500. Anyone can do it. And what we're doing is instead of price, we're selling what's called IV rank right here, or implied volatility rank. You want to sell a golden gecko when IV rank is above 50. See this green line when it's above 50? And always sell it when it gets as high as 100 here. But anyway, you want to sell it when the IV rank is high, above 50, and you want to buy it back when it's low, when it drops below 50, basically, right? So you want to sell high and buy low. All right. Now, this is a year-to-date chart, so that's all it is. All right. So you can see, this is a 1 year chart. So you can see it went above 50 how many times last year? Once, twice, it broke above 50 once, it stayed above 50. So basically this whole event just counts as one event. So once, twice, yeah, I guess I'm going to count these because they touch, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm going to count all this. 13, 14, 15, 16 times. Basically, not even that, 15 times. And remember, that's why there were 30 trades. Basically, I only did them. You can be successful with this only doing it when it crosses above 50. Okay? Here's the reason why. When IV rank or volatility rises above 50, the premium in the options you're selling is rich. Okay, that means you can get more money for them. If you have no idea what I'm talking about, go to my YouTube channel or on this forum, go to the Golden Gecko What You Need to Know videos. I think they're right. Go here. Here, go to the Golden Gecko thread, and there's a whole video series you can watch on exactly what I'm talking about. Okay. And you can go there. In fact, or if you're a YouTuber, you can just go. I don't even know where my here. Go to where is it? Go to my YouTube channel and my play. If there's a play, I don't even know where it is. Here we go. Golden Gecko. You can look for Hit It Monkey Golden Gecko options tradings, and they're right here. There's a whole playlist of what you need to know first, second, third, fourth, fifth. Either way, you can go to either one. It'll help you out, and you can start there. Okay, so all you're gonna do is, and we're non-directional, meaning we're gonna bet it's gonna stay within a certain range. All right, that's all this is. Okay, so you're only gonna do them as my cheat sheet says here. You're only gonna do it when IV rank gets above 50. All right, and the chart will tell you that, or anyone here can tell you where that's going to be, whoops, or whatever. But you only want to do it when it gets above 50. And I don't know what happened to my. Oh, here it is. I gotta turn this into. Here it is. Okay. All right. So anyway, sorry guys. Let me just. I don't know what I'm doing here. Oh well, whatever. Anyway, okay. So let me show you what that means real quick. I'll go to Do. See, so you're only gonna do anything. Basically, all you're gonna do is wake up every morning and see if this line is above 50. Okay, like look, it is, right? I'll zoom in. I'll go year to date. Let's go to thing here, and I'll go to year to date. So this is just this year to date, right? So you wake up in the morning and go, oh my God, on January 2nd, IV rank went above 50. You can do a Golden Gecko. You would have entered in here, and you would have gotten out here, basically, right? When you dropped, or when you hit 50% of your max profit. And then again on the 12th, you would have gone in, okay? So say, Mark, is it too late? Is it today? No, you can do it now. So you can do a Golden Gecko right here on Tuesday. Okay, what's a Golden Gecko? Let's go to Do. Here's all a Golden Gecko is. Let me close this out. Go to home. All you're going to do here, okay, is you're going to go to trade. You're going to hit SPY for Standard & Poor's 500. And I'm going to show you what a Golden Gecko is. You're going to go to, oh, come on. You're going to go to strategies. You're going to click on Iron Condor. You're going to click on advanced. You want to make sure this is 45 days. You want to make sure this says 1 standard deviation and 5 and hit click go. Okay, and I'm going to zoom in. Now, oh wait, I want to make sure we don't. Why do I have weeklies? I do not want weeklies. Timeout. No, take that out. Yeah. 45. It shouldn't show me weekly. Let's try one more time. Okay, see the W is weekly, so you want to just expiration date. You want to change it to where it doesn't have that. So that's the closest one. Okay, so there's only how many days left? 33 days. That's fine. Okay, if you want, ideally you want to do this where there's 45 days to expiration. So let's just do March just for this, for just this training. All right. Now, even if you have no idea what I'm talking about, all I'm saying is what you want to do is your orange strikes here, you're going to just move them out to the 1 standard deviation line. What the heck am I talking about? See these lines right here where it says 2 standard deviation line? That's a 2 standard deviation line. See this one where it says 1 standard deviation line? Okay, you're going to move this little thing right here so it lines up to that line for the 1 standard deviation line. These little green ones that says buy, you're going to move it out to where it says 2 standard deviations. As close to it as you can, okay? Like right around there. Okay? See that? All right? That's all you want to do. Okay? Don't worry about these white flags. That just means I have a position on them now for, you know what? I'll just hide them to make sure so you don't have to worry about it. All right. Okay? That's all this is. Okay? That's all of Golden. This is it. Okay? What this means is you see where it's green, that's where you make money. You see where it's red, that's where you lose money. So all this is saying is you're betting that at the end of 61 days, the S&P 500, the price of the S&P 500 will stay in this range. Okay? Now, what are your odds of that happening? Well, you have a 73% chance of making money. Okay? That's it. That's how simple it is. You do this only when IV rank is above 50. Well, where's IV rank now? It's 62. And when do you take it off? As time goes by and as IV rank drops, you're going to see that your account will start going up in value because you're making money. Okay? So what do I mean by taking your profits, max profit of 50%? You want to take off this position or take your profits when you hit 50% of your max profit. Well, what's the most you can make? Here, if you put on this position and you're selling it first for $1.47, buy it back when it gets to half of this. So you just take your calculator, $1.47 divided by 2. You want to buy it back at 73 cents, and then you made 50% of your max profit. That's it. That's all you do. Okay? And you can tell by looking at your positions page on how you're doing. Okay? Now, if you go back to I'll go back to this. So every time this goes above this green line, you place a trade, a Golden Gecko. That's all it is. That's what Project Making Dough at Teach Trade 2014 did. Okay? There were 30 fills, and I made 10.84%. That's it. Okay? So 15 going in, 15, that's all it is. Now this year you're gonna have, I think this year you're gonna have a lot more times you can trade. Because remember now, look, it only happened 15 times last year. That's like a little bit over one time a month. So you literally would have made trades only one time a month. How big you go is up to you. All right, like Dylan Radigan, he just buys index and holds it. Well, you could literally do one for almost 25% of your portfolio. Okay, so you have 25% invested in your portfolio. If it moves against you, you have capital and you have margin left to adjust your position. But basically, you're only going in, when it's advantageous to you. Okay, so that's all I did. That's all I did. All right. Now, here's the cheat sheet, and if you follow along later, you'll understand what this is. So look, I only do it when IV rank is above 50%. Okay. And you can do this on any stock. I recommend if you're starting out, just pick an ETF like the SPY, and you want to collect at least 19.8% of the expected move. I'll go into that later. It's not even that important. You can even do it without that and still make money. Because in fact, last year I didn't do this part until towards the end of the year, because this market measure didn't come out till later. So anyway, you're looking at doing this when there's 45 days left to expiration. You're going to sell the 1 standard deviation out of the money put in call strikes, 84% on both sides, and then you're going to buy out the further 2 standard deviation put in call strikes. And let's say you can't watch it. You can place what's called a good to cancel order. So once you get to 50% of your max profits, Thinkorswim or Toss or Doe will buy back for you, and you don't have to worry about it. Okay, so for you new people, that's all this is. I have 3 minutes. I'll do a real quick overview again. You are not betting on a direction. You are betting on the numbers. Okay, you are betting that statistically the stock price will stay in its given range. All right, that's all you're betting on. Okay, so you're betting that the S&P will stay within a 1 standard deviation range. That's all it is. So again, all you're doing is betting when the IV rank is at 62.4%. You want to do this bet anytime it gets above 50. And then what are you going to do? Simple, right? You're going to open up your Doe account. You're going to hit trade. You're going to, where's my clear? You're going to open up a trade. You're going to go to strategies. Wait, I'll just go. How do I clear this, man? Sorry. You're going to go to strategies. You're going to click on Iron Condor. You want to make sure normal Iron Condor is your default setting. You want to set this to 45 days, 84. Your target out the money is 84%, which is 1 standard deviation. And you want to start off at your total width of 5 strikes wide. You're going to click go. Doe will automatically take you to the closest strikes and expiration that's closest to 45 days. But these expire weekly. You want to make sure, this doesn't say weekly. You can expand your time to the next month. There you go, all right? And then you want to just adjust the top green ones till they're at that closest to the 2 standard deviation line down there as possible. Here we go, and that's it, okay? You want these closest to the 1 standard deviation line as possible, okay? And that's it, all right? Hope that helps. Let me know, and I'll do some more videos later. Have a good one.